Today is Tuesday, December 22nd, and this is a recap and an analysis for the video game market's activities today. As we expected before we headed toward this week, it is a low volume week, it is a short trading week. Tomorrow, for all intents and purposes, will be the last trading day of the week because we only have half a day of trading on Thursday, and the path of least resistance during very low volume is higher, meaning the retail traders hold and control the market's trajectory during this week. Right away yesterday, you saw the panic in the morning. What happened? Retail traders, aka the Robin Hoodiots, rescued the market because the Robin Hoodiots constitution is, just a reminder for you, that stocks only go up and there are no red days. And if there are red days, there are opportunities to buy. And that you buy first, ask questions later. Matter of fact, do not ask any questions. So therefore, you see that the trajectory for the market is upward. However, we are starting to see some technical exhaustion in some charts. We will discuss those and more. And of course, in the headlines of the day segment, I have more information about the stimulus, macroeconomics news, market sentiment news, and of course, we will discuss the market moving news of the development of Apple's car. With that being said, we do have a market to cover. And here we go. The Dow Industrial Average closing in the red by 200.94 points, or a decline of 0.66%. The Nasdaq closing in the green by 65.40 points, or a gain of 0.51%. The S&P 500 closing in the red by 7.66 points, or a decline of 0.21%. And here are the sector's performances for the day. Leading the pack, capturing the gold medal is technology for the second place, and the silver, real estate. And we have a tie-up pretty much for the third place and the bronze medal between utilities and healthcare. The laggards of the day led by energy, basic materials, and communication services. What are we seeing in the US dollar? We are seeing a bounce from oversold conditions. Could it morph into a short covering squeeze? That is certainly a possibility, but we're not seeing that yet. All of what we're seeing is a bounce from very oversold conditions in the dollar index, and when the dollar rises, you see that energy and basic materials suffering losses so far this week. Moving on to the futures market performance for the day. And right away, as I told you, you see the rise in the US dollar that translates into declines in crude oil, down significantly for the day, almost 2.5%. And we also see declines in metals, gold down, silver down big, platinum down, copper down. Meanwhile, we see palladium holding its ground, closing pretty much flat. What do we see here in softs? The notable outperformer is OJ. Of course, OJ been lagging, suffering losses for the last few sessions, and it is no wonder why you see OJ catching up with gains we saw in lumber, sugar, coffee, etc. And speaking of those, sugar, lumber, coffee, cotton, all muted for the day. Meanwhile, coca is the notable decliner, losing over 1% for the session. Moving on to meats. What do we see here? Lean hogs pretty much closing flat, while we see losses for live and feeder cattle. Moving on to grains, and we've been talking about the inflation in food prices, and the march continues. Soybeans up. The notable gainer is soybean oil. Wheat up. Canola up. At some point, it's gonna get very, very expensive for the average consumer who's already suffering from loss of income to catch up with the inflation in food prices. Is the Fed considering food inflation at all in their calculation of the overall inflation in the economy? Hell no. Moving on to the big casino, the options market, and let's see what's going on today and how hot the tables were. At number one, and this is the insanity land right now, Apple announces the iCar and the morons go Naruto style, all in, stampeding all over the place, creating insanity in the options market. They're not even interested in buying the stock. This is all done via call options, pumping the market on mirage footing. What does that mean? The market is not climbing on solid footing, and you know what's going to happen next. The rug will be pulled right away. This is absolutely unhealthy, but we are in 2020. We are in the heat of the mania and the bubble. So here it is. Apple coming up number one with over 3.7 million contracts. What does that mean? Just for the newbies so you can understand the magnitude of the mania. This means that in notional value, the volume of options traded today for Apple is equivalent to 370 million shares. How many actual shares were traded in Apple stock today? About 169 million, meaning that the notional volume of the options trading is double the actual volume of stock trading in Apple. This is the insanity. They're not even interested in buying stocks. Everything is done via call options. These morons are marching to the slaughter. They're getting hooked up in this gambling, just like as they're betting in the horse track. And one of those weeks, they will be caught by surprise. We will see a sudden flush in the market. They will lose their money right away. Every week passes, they become more arrogant in their behavior. They take more risk. They want to go all in because this has been working for them. The same pattern of buying out of the money, call options week after week, has been rewarding to the zombies. But we will have one of those weeks. You'll have a sudden decline. They will go all in because they have turned 1,000 to 10,000 into 100,000. Why not go for 1 million? They're going to go all in buying Apple, Tesla, Palantir, whatever it is. The rug will be pulled. They will lose everything. And check out the call options percentage of the volume today for Apple, over 81.5%. Absolute insanity and mania. Coming up at number 2, the Tesla table with over 1 million contracts traded today. About 58.5% of those were calls. Coming up at number 3, NIO with over 670,000 contracts. All about 73% of those were calls. Palantir, per usual, but you see the ticker QS, QuantumScape. Of course, this is one of the Robinhood's favorite names, and today the name was up over 38%. Why? Because they're betting with insanity in the options market. Here it is, about 500,000 contracts traded for this particular stock alone. And again, in notional value, this dwarfs the entire volume of the stock. Sometimes we see that the notional value of the volume traded in the options market actually dwarfs the entire shares outstanding for the stock. Absolute insanity. The call volume here was about 71.5% of the total volume traded for QuantumScape. And here it is, GameStop, the new promising business, the future bro, trading over 400,000 contracts, and about 58% of those were calls. Grab a Robinhood and sit them down and tell them in 2 minutes or less, explain to me what QuantumScape is and what is your investment thesis. What do you see the company doing 2 to 5 years from now? They wouldn't even know. They wouldn't even know what they're investing in. Somebody feeds them the ticker in the morning, they buy call options, and that is it. Moving on to some of the unusual activities in the options market, and let's see what's going on. Here it is, the new promising company, the shining light of the roaring 20s, General Electric. We're not talking about the roaring 20s of the last century. We're talking about this one. They're buying the 11.5 calls, expiration date January 15th, with expectation that the name will climb over 8% by then. Meanwhile, here we see a put spread for the IWM. Of course, it's been very frustrating trying to bet against the IWM. You buy put options, you short. What do you know? Next, you get a smack in the mouth, and the IWM continues to climb higher and higher every single day, and pretty much defying all the technical indicators, defying gravity, defying everything. But of course, we know that the correction will be extremely violent in the IWM, and here we see a bearish bet against small caps. What they're doing here is that they're buying the 175 puts, expiration date January 29th, and they are paying about $1.70 for this trade. And to lower their entry cost, they're selling the 165 puts, and they are collecting, this is of course for the same expiration date, January 29th. They're collecting about 90 cents credit for doing so. All in all, they're lowering their entry cost to about 80 cents a piece. Meanwhile, their profit range, if we see a complete collapse in the IWM, and we see the IWM closing at 165 or below by January 29th, they could make over 1,000% profit from this trade alone. So this is a very smart structure. They're not being greedy. They are going a little out of the money, but they are structuring the trade correctly. Remember, a successful options trade is constituted by 2 elements. The construction of the trade, before you even enter the trade, the construction is very important, and then the management. What do you do after that? Do you even have a plan for managing your trade? And we do see here a bullish trade for the XLF, the financial ETF. They're buying the 30 calls, expiration date February 19th. With expectation that the XLF will climb over 5.5% by then. And again, this is not an expensive trade. They're paying about 55 cents a piece. If we have a rise in yields and if we allowed the criminal banks to buy back their shares, why not? The XLF climbing all the way to February. And here we have another one for Peloton, the ticker PTON. Of course, the mania in this name continues. Pretty soon, we're going to have $100 billion bike company. And this time around, they're buying the 170 calls. Expiration date, you guessed it, this upcoming Thursday. They got 2 days for this trade to work. How much are they paying? They're paying about $1.10 to enter this trade, and Peloton needs to climb over 5.5% by expiration date for this trade to be profitable. Here's another one from the mania crowd for GameStop, GME, and they are buying puts this time around. Believe it or not, they're making bearish bets on the name. But this is the Robin Hoodied world, right? They pump the stock on Reddit or TikTok or whatever. And you see the stampede pushing GameStop 10, 20, 30% in a few days. And then whoever pumped the name plans a dump on the morons who followed their advice. They buy put options, they dump their shares, and they cash in the way out. Sometimes I feel that the Robin Hood's world is pretty much like Mean Girls. Everyone is planning to stab the other person in the back. It's like a pyramid scheme. I pump on Reddit, somebody follows me, their job is to recruit another one, and another one, and another one. And the last entrants to the trade, of course, are the ones who hold the bag. And in this case, they're buying the 18 puts, expiration date this upcoming Thursday, Christmas Eve. And they are paying about 40 cents for this trade, and the expectation is that GameStop will collapse over 7.5% by then. Now here is an interesting one at the bottom of the table for Qualcomm, and they're buying the 162.5 calls, expiration date January 15th, with expectation that the name will climb over 11% by then, and they are paying about 70 cents to enter this trade. Qualcomm been whacked really hard the last few days, and perhaps there's a rebound coming for this name. Continuing with interesting trades, we have one for the TLT, the long end treasury bonds rather, and they are buying the 165.5 calls, expiration date January 29th, with expectation that the TLT will climb an additional 6% or so. And here is the Mean Girls stabbing theme. They're buying puts on Plug. They've been pumping this name day after day, week after week. Now they're buying puts, specifically the 31 puts, expiration date New Year's Eve, with expectations that the name will climb over 13% by then. Similar story with the backstabbing for the ticker QS, QuantumScape. Now they're buying the 110 puts, expiration date this upcoming Thursday. It is the gambling crowd. They gamble on the way up, they gamble on the way down. Easy money, easy come, easy go. And for this trade to be profitable, they need QuantumScape to decline over 16.5% into not even 1.5 days. And they are paying about $3 a piece for this particular trade. I apologize for the insanity ahead of time, but this is the video game market. Can't do anything to change it right now. But here's another one for the UVXY, proxy of the VIX, and they are buying the 13 calls, expiration date January 22nd, with expectation that the volatility index, specifically the UVXY, will climb over 8.5% by then. They are paying about $2 a piece to enter this trade. And of course, that translates to over $1 million. Somebody's betting over $1 million that we will see a rise in the volatility index. And here is the last trade of the day, of course. We've been seeing this theme over and over and over every day for the solar ETF TAN. They're buying the 110 calls this time around, expiration date the 31st of December, aka New Year's Eve, and they are paying about $1.30 for this trade, with expectation that the solar ETF will climb about over 7% by then. Moving on to the headlines that shape the day, and right away we are starting with some macro news. And we are playing a little catch up here from some news from yesterday. We got the National Activities Index from the Chicago Fed, and we are now trending lower. We had the massive crash at the beginning of the crisis. We bounced all the way higher, and the expectation is that we will stabilize pretty much at the range that we were trending at pre the pandemic. However, we are now starting to curl downward, and pretty soon we will be in contraction territory once again. And today we heard about the existing home sales data, and they fell 2.5% in November, and this was the first decline in 5 months. We had 5 months worth of gains in existing home sales, the home or the housing bubble, and this is the first time and the first signal that we are seeing of a slowdown in that bubble as well. And you see that we are month to month in contraction territory. However, home prices continue to climb. Inflation is here, however the Fed is too blind to recognize it. And then we heard about consumer confidence. Last week we heard about retail sales and how disappointing that was, indicating weakness in the consumer. Now we have the consumer confidence index coming up at 88.6 versus 97 expectations. By the way, last month we had a reading of 92.9. So we have a significant slide here in consumer confidence. And you think that the $600 of stimulus is going to fix that? Forget about it. After all, we are a consumer-based economy. If the consumer doesn't have disposable income, if the consumer is worried about job security, if the consumer confidence is dwindling and trending lower, how do we expect the economy to continue to recover at all? And now let's move on to talk about the stimulus. The stimulus is passed and we're done with. It's over. Everybody's getting $600 plus $300 in weekly unemployment benefits. And here is the breakdown of the stimulus. We're giving the majority to small businesses in another round of PPP loans, of course for the cronies to scam the taxpayer and score some more free cash. But when you look at the breakdown, we have small business, direct checks, unemployment benefits, vaccines, schools. Everything looks hunky-dory, right? Wrong, because when you look at the details, the devil is always in the details. When we dig down, we realize that we are giving $400 of stimulus to people in Israel. And we're not talking about Israel, Pennsylvania. We're talking about Israel in the Middle East, different country. Furthermore, and this was all over Twitter, it caused a lot of outrage. When we dig down in the details, we see that we are giving millions of dollars to the Kennedy Center, the Smithsonian Museum, the Natural Art and Humanities Museum, hundreds of millions of dollars. In addition to, we're giving stimulus money to foreign countries. We're giving over $1 billion to Egypt, about $500 million to Ukraine and Israel, Nepal. Meanwhile, you, the American people, are getting $600. That is it. Your government is working very hard for you. And by the way, if you are from Egypt or Israel, any of these countries, next time I see you, you are buying beer. That is the least you can do because I've already paid you for it. Oh, and by the way, all of the delays on the talking about the stimulus that's been going on for months, you'd think that there was a very sticky object here to serve the American people, right? But here it is. The 5,000-page funding bill, including COVID relief, also has section detailing the reincarnation of the Dalai Lama. This is what your beloved politicians are busy discussing, the reincarnation of the Dalai Lama. I don't know what the Dalai Lama scored in the stimulus checks. Probably he scored a couple of millions here and there. Oh, and by the way, when you dig a little more, the new stimulus bill makes it illegal or makes illegal streaming a felony. This is, of course, coming from the politicians sponsored by Disney and Netflix. Priorities. But by the way, if you are wondering about the stimulus impact in the stock market, here it is. The Robinhoodians will receive $600 each. There are about 50 million of them. That will come about $9 billion of new cash that is about to flood the market. All of that, of course, going to go in call options expiring the very same week. Out of the money, call options expiring the very same week. So again, don't be surprised if we see a bump in the stock market very soon. Although, if I'm a Wall Street greedy person, I will look at the number of 9 billion and I will say, why not sell them a bunch of call options and crash the markets on their heads, and let's cash in a cool $9 billion of free additional cash. And by the way, with all that spending that our beloved politicians are doing, giving Egypt and Israel and the Dalai Lama some free cash. Here it is, millions of renters are fighting a wave of evictions as poverty surges. This is America. They only gave you $600. Take it or leave it. Are we living in a tyranny or what? Oh, but Mitch is the bad guy. Oh, but Nancy's the bad person. No. They're both in cahoots. They're both playing the same game. They don't have your interest in mind. Try pulling your head out of your ass and remove yourself from the team red, team blue mentality, and maybe, just maybe, we're gonna have some positive change in this country. Moving on to some market sentiment news, starting with the IWM. You know the insanity and the mania in small caps? You would think that the mania is only coming from the Robin hoodies, but quote-unquote Wall Street experts are also joining the mania, leaving the rationale in the back seat. Fund managers surveyed by Bank of America are incredibly bullish on small caps, with net percentage expecting outperformance over large caps surging into positive territory. Even the Wall Street quote-unquote experts are complicit in this. They're going all in with clients' cash, pumping and pumping small caps until things break down and the entire house comes down crashing. I don't know if you noticed, but we have a new variant of the virus, and it is just a matter of time before we find the virus already circulating here, and we're going to have another wave of shutdown. Tell me again how small caps are going to outperform. We are still way far from being out of the woods from this crisis. And since the mania is going on, why not for SoftBank, aka the devil, to join the scam and extract some cash from the moron retail traders? SoftBank launches blank check company to join the SPAC craze. And here is the last piece of information I got for you about market sentiment. Remember that in November, even perma bears became perma bulls. They're bullish in the stock market. So all of you who call me perma bear, I will sue you and report you to YouTube for spreading false information. There are no perma bears. We are all bulls in this market. However, we are seeing a divergence here in December from these morons who call themselves economists. Economists are the only ones who are turning net bearish on the market in December. What do they know, these amateurs, these economists? What do they know? Even perma bears are bulls. Market experts are now the Robin hoodies. These economists, they're a bunch of bums. They're going to lose their money. They have no clue what they're doing anymore. They should go back to college, aka the Robin Hoodie's college, so we can teach them how to play the game in this video game market. And let's move on to some EV news, specifically what we heard about the upcoming iCar from the iMob at Apple Incorporated. Here it is. Apple targets car production by 2024 and eyes quote-unquote next level battery technology, reports Reuters. What do you know? The morons stampeded in the morning right away to bid on Apple stock on the iCar optimism. And when we talk about the ADHD Robinhood's traders and investors, as expected, they're dumping Tesla for the new shiny object of the iCar. And of course, just a side note, if you're planning on buying the iCar, the steering wheel is sold separately. Moving on to Reverend Elon, who got a little agitated by the news of the iCar, and he issued a tweet saying that he approached Tim Apple a few years ago about buying Tesla, and Tim Apple slammed the door shut in his face and told him he's not interested. Of course, Reverend Elon thinks that he's bragging about his success, not knowing and realizing that his souffle company is about to get crushed. The Chinese are eating his lunch globally, and now Tim Apple is about to hammer the nail in the coffin on the souffle. But I have a question to Tesla culties. Now that we have news about the iCar, is Tesla still the new Apple, or is Apple the new Tesla? I still haven't figured this one out. Please let me know. And here is more EV news for you. In an SEC filing Monday, Lordstown said it has taken in about 80,000 non-bidding reservations for its light-duty truck called Endurance. Oh, and by the way, 40,000 of those came from me alone because it is an unbinding reservation. So who cares? Give me 1 million of those, Lordstown. And of course, you see the mania in the stock itself being bought. This is a company that doesn't even have revenue yet, but it is valued at over $3 billion. Who needs revenue anymore? Revenue is for losers. And here is the last piece I have for you coming from Toyota. Toyota hopes to commercialize an autonomous shipping container-like vehicle that it says could double as a mobile office. Now, while the Robin Hoodiots stampede in buying Tesla and the iCar, Lordstown, Xpeng, Lee Motors, QuantumScape, I am quietly buying Toyota Motors because this old school company is changing the game. Number one, they already have a hydrogen fueled car. Number two, they're already producing their own batteries and they have a lineup of very reliable EVs coming to the market. Number three, their combustion engine business is still thriving and growing. Number four, they are doing some horizontal integration by adapting new businesses and new innovations, just like what you're seeing right now, this autonomous shipping/mobile office container. And now, let's move on to the heat map analysis. And finally, Finvits updated their heat map to include new stocks and the new weighting in the market. And let's go through the action for the day because all in all, it was a negative day with very few exceptions. Remember, when you look at the heat map, it is abundantly clear who is holding control of the market's trajectory this week. Retail traders. Professionals are already done. They went home for the year last week. Institutionals are done. From this point on, all the way to the end of the year, it is retail traders, and the path of least resistance is higher, specifically in their favorite names, until and unless we have an event that will trigger algos to sell. But for now, here is the heat map for the day. Starting with the technology sector, right away you see the big massive box of Apple outperforming the entire market for the day due to the iCar optimism. Apple closing at almost 3% for the day. Microsoft scoring some gains. Microsoft been moving out of consolidation. Another 61%, not 61%, that would be massive. 0.61% for the day. We saw positive activities here for infrastructure, Adobe up, Oracle up, software, names, similar story here. You see Shopify continues to outperform. Massive day for Workday, over 6% in the green. ServiceNow, positive day. Trade Desk. And you see the underperformer is Snowflake, closing down almost 2.5%. And look at how huge Snowflake is already. It is almost bigger than Uber. It is actually bigger than Uber, but it's almost as big as Shopify and ServiceNow. Can you believe this garbage? A company that will barely make $400 million is valued almost as big as Shopify and half of the valuation of Salesforce. Oh, and by the way, another name from the Robin Hoodiots crowd that did not do well today is Palantir, down over 1.5%. And check out the weighting of Palantir. It is almost as big as VMware, a much older and established company. But again, we are in the IPO mania craze. What happens with the semiconductors? Muted day all in all. No action whatsoever. You see Nvidia still in a coma. And the question is, when this name wakes up, will it trade higher or lower from this point on? Moving on to communication services, Facebook, Google closing in the red. Of course, we have an antitrust lawsuit against both companies. That is the challenge for big tech in the quote-unquote roaring 20s. They're going to have a lot of legislations against them. I do like Facebook as a business. I don't think that it is ridiculously overvalued when you compare it to Apple, Amazon, even Microsoft. The problem is, how do you get over all of the potential landmines in terms of legislative action against the name? Not just in America, but worldwide. We see more declines here for AT&T, and remember, this is a name that I'm eyeing to buy, but I'm waiting and waiting for this sell-off to subside before adding the name to my portfolio. Muted action for Disney and Netflix. Zoom, similar story, muted action. We see T-Mobile outperforming over 1.5% for the day due to upgrades from analysts. The winner of the day in communication services, Pinterest over 3.5% and Zillow over 3%. What do we see in consumer cyclicals? Amazon muted, Alibaba, the pain continues. You see Tesla, it is a huge weighting almost as big as Alibaba. Can you believe this garbage? Tesla closing almost 1.5% in the red. What do we see in Auto Motors? NIO down, Xpeng down big, over 4%. Lee Motors, similar story, almost 5% in the red. What is outperforming here in automotives? We see Ferrari closing about 1% in the green. Toyota, Honda, General Motors, all muted for the day. Meanwhile, the Martian Carvana continues over 4.5% gains for the day. And when people ask me why is Carvana continues to march higher and higher and higher every day, number one, they have a massive short float, so shorts are covering every day. This is another Tesla stock right here. Number two, the bet is that in the future we're not going to have any dealerships to sell used cars. Everything is going to be done via Carvana, meaning that Carvana will have a monopoly over the used car market. It is a big assumption, a long shot, and any disappointment from the results of Carvana to poke holes in this narrative, that's when Carvana stock will start to reverse downward and trend in the red. What do we see from the reopening names? Trading in the red, cruises down, casinos muted, hotels, red day for Marriott, red day for Hilton. Of course, the outperformer here in the consumer cyclicals section is Peloton, double digits in the green. Moving on to consumer defensives. Muted action across the board. The notable decliner here is Philip Morris. It's been an outstanding gainer for a few weeks now. Today it's taken a retreat down over 2% for the session. The overperformer here is Albertson Grocery Stores, closing 3% in the green. Moving on to real estate, which captured the second place for the session. We see big gains for Public Storage, Digital Realty Trust, the ticker DLR, and of course Realty Income Corporation, the ticker O, closing above 1.5% for the session. Moving on to utilities, the weakness continues in Dominion Energy. However, we see outperformance from renewable utilities. Again, this goes hand in hand with the solar ETF and all the green energy trade that is very favorable by the Robinhood crowd. What's going on with basic materials? The dollar is climbing. Right away, you see pain in gold miners. Newmont down. Barrick Gold's down over 2%. Franco-Nevada, similar story. We see declines here for Freeport-McMoRan, almost 2.5% in the red. And of course, Valley, one of the best stocks in basic materials, also down over 1% for the session. What do we see here in industrials? Muted action. The notable decliners are airlines. Delta closing in the red by the tune of about 3%. Boeing not doing much today. We see notable declines for Caterpillar, Honeywell, General Electric, Emerson, but the outperformer remains UPS, closing above 1% in the green, and Waste Management also above 1% for the session. Moving on to energy. Again, the dollar rises, energy goes down. ExxonMobil, Chevron, the underperformance continues in this name, but we are seeing massive declines for Occidental Petroleum, the ticker OXY. Here is another 3% to the downside for the session. Moving on to healthcare, what do we see here? Big pharma names remain muted with bearishness notable in Pfizer and AstraZeneca, Gilead. All the vaccine names, the air is starting to come out of the bubble. We see Moderna and biotech down almost 9%. Massive losses from Moderna here the last two sessions. And the outperformance remains from Illumina in diagnostics. Illumina scoring another 2% or so this session alone. And we see in medical devices, Edwards Life Sciences, one of my favorite names, climbing over 2.5% in the green. What do we see here in financials? Big banks in the red. The notable decliner is Citibank, declining over 3% this session. And we see notable declines here for the Bank of New York Mellon, declining almost 3%, along with Goldman Sachs, Morgan Stanley. We're seeing some profit taking here in the financial sector after the pop from the resumption of shares buybacks. The outperformer here is PayPal, closing at around 2.5% for the session. Moving on to the rotation trade, what do we see today? It is clear that it is a momentum kind of day, a stay-at-home kind of day, with very few exceptions. Facebook and Tesla, I just explained the reason for you during the heat map analysis. The outperformer, of course, is Peloton and Shopify. Moving across the aisle, we see declines in the reopening stocks. And the notable decliners here, Chevron, Six Flags, Royal Caribbean. Meanwhile, we see Planet Fitness actually closing in the green. The notable outperformer in this particular trade. And now, moving on to the charts analysis, starting with 15 minutes chart of the SPY. What do we see today? We are still trading in range. The resistance is 369. The support is 364. All what we have done today is trading flat. We did not do anything whatsoever. There was a baby sell-off around lunchtime, but that was bought right away. You see the majority of gains today for individual names, specifically the retail favorite names. But for the indices, they remain muted. And here is a daily chart for the SPY. By the way, you see that big tail candle from yesterday. This is an error. We never traded in that range at all. I don't know if it is showing in your charts program, but it is showing in mine. Did anything change in today's activities for the SPY? Not at all. We see that the MACD indicator continues to trend lower, so is the RSI, indicating weakness in momentum here for the S&P 500. The best case scenario here for the bulls is to consolidate in a range for about a week or two and then resume the rally with new blood, perhaps in the upcoming year. The best case for bears is that we see a closing below 364 and perhaps combination of a new round of lockdowns that would trigger algos to sell off and intensify the downward momentum in the S&P 500. But these days I've been watching the continuous contract of the SPY in the futures, and what I see here, we are trading in range. We got rejected once again from the upper limit of the range, and we are trending lower. We do have support at around 3,600. This chart is not going to turn bearish until and unless we close below 3,600. So I am watching the futures chart very carefully, very closely every day here. If we close below 3,600, that will indicate a loss of momentum and perhaps paving the way for the 10% correction scenario. For now, the chart remains bullish to neutral. Moving on to the Qs, 15 minutes chart. What do we see here? Gapping higher in the morning, having that mini sell-off during lunchtime. However, the trading crowd picking up the dip and closing the Qs in the green. Pretty much in range here, nothing significant happened. Now let's move on to the daily chart of the Qs. What am I trying to illustrate for you here from all of the lines on the drawing? We had a very significant trend line during the summer. We diverged way higher from the trend line. We had a correction, and at that time I called it the death of the trend. It is over, it is done. I showed you exactly why from certain technical indicators. And all what we have done since then is consolidating in range, and now post-election we are seeing the emergence of another bullish trend. The Nasdaq remains the strongest chart here aside from the IWM. It is still not definitive whether this new trend is as strong as the last one or will continue higher, because you see that the momentum from the RSI is much lower than the last trend, indicating that this time around we are much weaker and we need a new round of new blood investors to push this thing higher, pick up the momentum, and create another rally this upcoming year. Absent of that, we will run out of buyers and you will see sellers taking charge instead. Moving on to the IWM 15 minutes chart. What do we see here? We stopped pretty much at the level of 198, creating a double top formation, recovering from the slide, and we are creating a bear flag formation, indicating that from 15 minutes perspective, the IWM is starting to look a little weaker here. Don't be surprised if we see the IWM trading lower tomorrow. However, when we zoom out for the daily chart, what do we see here? I drew the rising wedge for you because a lot of people have been asking about it. I'm not a believer in rising wedges. I keep it simple. I look at the MACD, the RSI, support and resistance lines, and that's pretty much it. Sometimes I look at the moving averages, but I don't bother with anything else. From this chart alone, the IWM has the momentum, has the strength to continue to march higher and higher. We are not seeing any reversal signal from a daily perspective. When do we see a reversal signal? Closing below the level of 191.5. But I should remind you that we are getting very close to the psychological level of 200. Nobody wants to sell right now until we hit 200. Everybody's saying, yeah, I know it's ridiculous. We made a lot of gains, but why not push it all the way to 200? It becomes a very important psychological level to reach. The problem is usually they pull the rug before you reach that level. You get very close to the important psychological level, and then they pull the rug. Why is that, by the way? Certain traders and holders of the IWM don't want to wait all the way to the 200 and then see a flush down and being forced to sell at lower prices. They go ahead of time and they press the sell button, say at 199.5, 199.70, creating the reversal and the sell-off right there. Somebody goes at the emergency exit door, triggering the alarm, and right away you see everybody else stampeding, trying to exit at the same time, and that would be the moment when the IWM will reverse and the trend, the upward trend that we've been in since post-election, will be ended. Moving on to the dollar index. I told you before the week even began that we will see an oversold rally here in the dollar index, and you see a big day for the dollar today. However, whether that's going to morph into short covering squeeze, that remains on the table. If we have a black swan event or any sudden event that would trigger the algos, we will see a short covering rally, short covering squeeze, a big one in the dollar index. Absent of that, it is just an oversold bounce. And again, that would have a negative impact on gold. You see gold declining as the dollar marches higher. For now, gold is just taking a retreat following the guideline from the US dollar. For now, the chart remains bullish until we see a massive surge in the dollar index closing below the 20 days moving average. That would be a signal that we will see further weakening here in gold, and you should take your profits for now. What about yields? The TNX, did we do anything significant today? Not really. Still trading in range, still gathering energy day after day, day after day. To do what? To blast higher and once and for all break above the very important psychological level of 1%. And again, I am on the record saying that if we do break above 1%, that would be a headline triggering piece of news, and perhaps that would be the moment when the market has to reflect on the validity of the rally since post-elections. Because as yields rise, we will have to contract the multiples of stocks. And let's take a look at the VIX and see what happened here. Yesterday it was a massive pop. It was a warning signal. It was a wake-up call. You saw the VIX blasting over 30% in a single day. Again, it is a retail traders week. What did retail traders do on Monday? They bought the dip, pushing the indices to close all the way pretty much at the flat line. And you saw a retreat in the VIX coming hand in hand with that action. However, the VIX broke out from consolidation. It managed to challenge the 25 level. Yes, it closed below it today, but it is still caulking the gun, gathering energy, readying for another move higher. This is how I read the tape. The VIX is not ready to wave the white flag yet. I put my money where my mouth is, and I bought the VIX a few days ago. I've been telling you this, and I continue to hold my call options for the VXX. And I do own the actual stock of the VXX. What's going on with Apple here? For weeks, I've been telling you that we are starting to see technical strengthening in Apple's stock. From that moment on, you saw Apple rallying significantly from the level of 113 all the way right now we're trading at 131, above 131. Where is the next resistance? It is all-time highs at the level of 138. But the question is here, if Apple is about to dip their toes in a very demanding business, very difficult business of car manufacturing. Remember that Apple year over year, last quarter, did not grow their net income. They actually shrunk the net income. Now, if you're going to go into a very demanding business, a very difficult business, that will shrink your margins further. And in any typical year, if Apple announced that they are working in a car, the market would have actually sold off Apple's shares, because why do you need to dip your toes and open Pandora's box into this very, very difficult endeavor? Just take a look at Tesla. It was a hair away from failure, complete bankruptcy. It was a miracle that they pulled it out. But we are in the 2020 video game market. And if Apple announces the EV car, the EV spaceship, the EV sandals, the Robin Hoodiots morons will buy the name. But perhaps today we did a little bit of reflection. At least the professionals who hold Apple's shares did a little bit of reflection and said, whoa, wait a minute. Maybe I need to take profits here because I'm not so happy about the iCar news. If we see more of that kind of thinking, Apple could run out of steam, get exhausted, and put a top for now. And here is the last chart of the day for Tesla. What do we see in Tesla? Remember, on Sunday, I told you that the peak above the upper limit of the range is a fake out, and we will go below it right away. This is exactly what happened, but what does that mean? Does that mean that Tesla's bearish now and it is a short? Not really. It is starting to look a little weaker from a MACD and RSI perspective. However, you're not going to be bearish in this name until unless you break the support of 599. Absent of that, Tesla's catching support from the 20 days moving average and perhaps is going to give it another shot to break above the upper limit of the range until and unless we break below 599, the chart remains bullish. And now let's move on and conclude this video by showing you some video game market charts, starting with QuantumScape. Look at this chart from a daily perspective. It is a stampede. Somebody feeds the Robin Hood idiots the ticker in the morning. That's all they need to know. They go Naruto style, heads first, buying the name. And of course, those deceitful pumpers already hold the stock. They want new morons to do the job for them, pushing the name higher so they can dump on their heads or creating series of pumps and dumps all over the place. And of course, this used to be illegal, but we have a dormant SEC that has been in a coma for the last 10 years. So don't expect any change to happen here. Here's the second video game market chart for Plug Power. Again, do they even know what this business is? Do they even know how to do financial forecast for this business? Do they even know how to do valuation analysis for this business? Do they even know how to do ratio analysis for this business? No, they don't. They don't care. You feed them the ticker in the morning. Some of the Robin Hoodie's leader on TikTok, Reddit, whatever it is, they feed them the ticker and that's all there is.
One thing I'm really good at is making money, and I'm going to teach you how in 60 seconds or less. So pay attention. This is going to take no time, and there's potentially hundreds or thousands of dollars for you to make. If you don't already have the app, go get Robinhood. It's 100% free and safe to use. Link your bank account, put some money, whatever you have to spare in. If you don't have any money right now, that's cool. We're about to get another stimulus check. Look up this stock, Plug Power. Code is PLUG. It's trading at $32 a share. What they do is they make hydrogen fuel cell batteries, so like renewable energy. Also look up this one. A little bit more expensive. Oh shit, what the fuck? There we go. Look up this one. Innovative Industrial Properties. They build medical marijuana facilities and manage them. A little bit more expensive, but worth it in the long run. If you don't believe me, here's when I tried to convince my dumbass friends a month ago that these were going to be worth some money. Proofs right here. Pause if you want to. But this is how much they were worth November 6th. So interact with this video if you want to see money TikTok.
Another one of the Robin Hoodie's favorite. Here it is, the TAN ETF for solar. Here's a monthly chart. Look at the insanity and the mania since the March bottom. This is not a glitch. This is not an error. This is what the 2020 bubble looks like. If you think that you are smart because you're holding the TAN ETF, think again, because this is another pump and dump. You are now in the pump, the dump will come. And if you're smart, you take your profits, if you made some, and leave the morons fight each other in this name. Here is another one, the ticker HACK for the cybersecurity ETF. Remember, we heard the news that the Russian hackers allegedly broke the nuclear grid of the United States. They hacked the entire nuclear grid. Again, in a typical year, that would be a market selling news. We will panic, we will sell the stock market. We want more information. What's going on here? Not for the Robin Hood idiots and the bubble of 2020. Good news is good news. Bad news is good news. And worse news is even better news. Why is that? Because if we have a hacking threat against the country, then that would be bullish for cybersecurity names. Even though those cybersecurity names are the ones who failed to protect us against the hacking attack. But that doesn't matter for the Robin Hoodiots. If there's an asteroid that's about to hit Earth, what would rational investors do? They will sell everything and go in an underground bunker hoping that they could survive. Not the Robin Hoodiots. They will buy Lockheed Martin and Virgin Galactic. Perhaps these two stocks will go on a steroids destroying mission. So here comes the asteroid optimism. If there is a massive earthquake that flattens half of the state of California, the Robin Hoodiots will see that as a source of optimism. Buy Home Depot, bro, because they have to rebuild all of these destructed homes. This is the mentality of the mania of the bubble led by the Robin Hoodiots. Euphoria turns into arrogance, and when a market makes smart people look dumb and dumb people look smart, it is time to run, because it is a matter of time before the big Wall Street guys launch the slaughter and the massacre against the Robin Hoodiots, flushing them out of the market once and for all because they need employees to flip burgers for them at McDonald's. We cannot let the Robin Hoodiots win for too long. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.